Recording in progress.
Okay, so let's go ahead and do this. So more or less, I woke up at this time. I started looking at the charts at this time, 8:30 my time, okay, when price was around this area. And like always, those of you that have been with me for a while, what are the confluences? Starting off by the first one. Market structure, well done. Second one, without losing any time. Fib, nice. And let me just add myself a reminder here because I want to explain one thing from one question somebody asked. Third one. Supply and demand. Fourth one. Liquidity, well done. Very simple, very straightforward. You should know this off by heart at this point. And then the extra confluences. Here the order doesn't matter, just it's indifferent. Imbalance is one, yes. Session liquidity, another one, well done. Point of control and entry model, well done. Okay, so especially for everyone new, when I trade the markets, this is my cheat code. This is everything I use to trade, okay? This literally right here is everything I use to spot trades. Systematically, I go from the start, I look for each and every single one of these confluences on price, and that's what I use to decide if I am taking a zone, if I'm not taking a zone, if I'm trading, I'm not trading, whatever, okay? Very straightforward. So, having a look at the setup we took from this zone, let's go ahead and just lay out the confluences and everything. So, firstly, market structure. If we looked on the bigger picture, taking account, so from the 20th, the past 3 days, okay, although we had a weekend, no, Friday. Okay, so yeah, taking into account from last week, okay, the weekend started somewhere here, if I'm not mistaken, yeah, somewhere here. Okay, so if we look at the market structure for the past week, it was very bearish, okay? Clearly, we have this. We have this breakout structure. We have this breakout structure and price is failing to break any high to the upside, okay? So price is just analyzing market structure. Price is creating lower lows and lower highs without breaking any high to the upside. So pretty much the market structure is pretty bearish, okay? If we take into account the past 3 days of last week, okay, of the last trading week, okay, market structure was pretty bearish. So it's okay to be looking for sells. Plus, we see prices failing to break any zone to the upside, which that is also a good indication. Okay, then we are going to look. So that's that market structure. But then we're going to focus on this area. Market opened and more or less here, okay? Somewhere here, market open. So let's have a look at the more recent market structure. The reason why I said it's a monitor zone and not a direct buy zone was because price, just looking at these past days, price seemed pretty bullish, okay? Price was creating an internal break of structure, oops. Internal break of structure with loads of volume. So price seemed on the lower time frame pretty bullish. So we could see price, just looking at this, shoot to the upside and break the highs, okay? That's why the zone was a monitor zone and not a direct sell zone. I waited for price to come to react, then we entered. So just looking at this, we could argue we had right here a break of structure or a change of character, okay, depending what you're considering as the trend. At this change of character right here, which to some extent indicates price could keep on trending to the downside, okay? So pretty much this is the full analysis for the market structure right here. We have a very bearish market coming from last week, okay? And here when price left this high without breaking above, it then created a change of character. It's a change of character considering this trend, okay? Or an internal break of structure to the downside. Therefore, this is our market structure, break of structure, and change of character right here, considering this trend. So pretty much we are bearish, okay? We are bearish, so that's the first confluence. Bearish. Then Fibonacci, we obviously want to get from this high to this low, okay, from the last impulse, which is this one. So this would be our interest area. Then somebody asked before, somebody asked, how can we avoid traps in supply and demand zones? How can we not fall for traps? This for me is very simple. The way I try to spot the zones with the highest probability, let's see if somebody can tell me in the chat very fast. How can we avoid falling into traps, into supply and demand zones, which are traps? Just look at what I'm moving. Let's see if somebody can tell me in the chat. So Fib, yes, by using Fib. And by using Fib, we are always trading the best discounted prices, okay? Or premium prices. Exactly, discount and premium. Exactly, premium and discount was pretty much what I was looking for, okay? By using the Fib, you are always going to be trading premium zones within premium and discounted areas from the last impulse or the last corrective move or whatever, which means with such a high discount, if you're in the right trend and you're trading at least a 75% premium or discount, the chances of the zone working out will always be higher than if you're trading from 20%, 50% or whatever. And we can see this clearly if we go, for example, into the 5-minute. You see we had this supply zone, which is outside of our area, and price just takes it out and respects it a bit, but takes it out. We have plenty of supply zones all around, okay? Here we have another one, which again, price rejects a bit, then takes it out. This one, price holds it for a while, but you will see how it eventually takes it out, okay? And so on. So to make sure we are finding zones which have the least chance of being a trap, okay, we just want to use Fib. We want to use our Fibonacci retracement tool and look for zones within our premium and discounted area, okay? So we have this area, then we're going to be looking for our fib zone, okay? We're going to, sorry, for our supply and demand zones, which is the next confluence. In this case, we obviously have this one on the 15-minute time frame. We have this one in the 15-minute time frame, but if we go on to the 5-minute, this is a bit all of my thought processing, and we throw our sessions indicator. No, it wasn't the sessions. No, sorry. If we go into the 5-minute, we have this wick, this liquidity wick, which price could target. And yeah, so we are going to be looking for a supply and demand zone within this area. In this case, the best zone would be this one right here, which has imbalance and so on. But I entered, if I'm not mistaken, on this high right here on this liquidity wick. So let's just use the whole 15-minute zone. And let's just use this zone. Therefore, these are the first three confluences. Then let's have a look at liquidity. So we have this liquidity high. We will see if price takes it out. I think it does take it out by 1 pip. And we also obviously have this trendline liquidity resting right here below to be taken out. Okay, price creates this liquidity pool. Most likely will take it out. So is it clear up to now? Is this clear now? We will go into the extra confluences. Then if you have questions, just ask them and I will answer them. So we have this liquidity. These are the 4 main confluences. Yes, yes, crystal clear. Great. Thank you. And now let's look at the next confluences. So imbalance. Imbalance, we have this imbalance right here after the zone. We have this imbalance, which I'm not sure if price fills it. I think it just taps into the imbalance and then moves. That's where we entered. That's where I entered. Session liquidity. So if we just go until 11 a.m. Just go until 11 a.m. The Asian high was left right here. So at this point, price did already mitigated the liquidity, this liquidity. Okay, so let's just mark it as an X of mitigated. And the Asian high was left right here, okay? This was the Asian high left, and price just taps it, takes it out to the exact pip and then gives the move. So this is our Asian liquidity. This is our imbalance, which price taps into the imbalance. Then point of control, let's see if the point of control lined. Point of control did not line up. And entry model, we could argue there is an entry model. Remember trend reversal 1, which is price creates a new high. Does a change of character, creates some internal liquidity, takes out the internal liquidity to our premium price, then moves. So we could argue we had this entry model, okay? If we look closely, if we look closely, pretty much this is what we are trading on the zone. Okay, what we are trading right here is pretty much this entry model, which is the trend reversal 1. Okay, trend reversal 1. So we could argue we have this entry model right here. If you look closely, it's pretty much the same. So yes, we did have entry model. Okay, so we had for this zone 1, 2, 3, 4, and imbalance. We had session liquidity. Now we will see and entry model. So this was the Asian high, and if I'm not mistaken, before price moving to the downside, no, it might not take it out. Okay, yeah. If you look closely, if you really look closely, okay, this was purely London. Price took out by a fraction of a pip. If you see, the London is just a bit higher than Asia. Okay, so we did have session liquidity. Price did take out the session liquidity. Okay, this was the Asian high. If you look closely, price took it out by a fraction of a pip, so we did have session liquidity as well. So it's pretty much we had 4, 5, 6, 7 of the 8 confluences on the zone, and price finally took a while for it to give the move, but eventually price did give the move perfectly. Let me go into the 15-minute. Eventually price did give the move, and yeah, it actually gave a great move. Great target would have been this low. Well, here we took some profits off on this low. Once price cleared this liquidity, took some profits off, and then just let it ride until today. I closed this morning. If I was to keep on holding, would have been an amazing entry, which it was a great entry either ways, but could have been even better. So yeah, this is how the zone played out. Okay. So is it clear? Is this clear? At the end of the day, those of you that have been joining, those of you that have looked at any of the lessons, you should know all of this off by heart. Okay. If you just realize it's always the same what we are doing. Clear, crystal, very clear, nice. Perfect. Yeah, pretty much, as I say, it's always the same, always exactly the same, over and over. Same confluences, same time of the day, same pair, same everything. So yeah, now, if you guys have any question, this is just the breakdown of yesterday's setup. If you guys have any question, let me know. I will be answering. Sorry, Monday's setup. How do I know where to place exactly my entry and stop loss? So ideally, you want to enter at the tip of the zone. You want to place your stop loss at the edge of the zone. Okay. And then for me, targets, I always like to follow risk to reward. So at 1-to-1, I will consider taking profits. If I feel like price is moving very nicely, I might hold, okay, to 1-to-2. This really depends. 1-to-2, I will take more profit. So for me, based on my experience, based on how I trade, based on the knowledge I have and how I've been trading this past years, what works the best is risk to reward, because I know my zones have maximum 28 pips stop loss, and I know price has a very high chance of reacting at least 28 pips from my zones. Okay, price has a very high chance of reacting at least a 1-to-1 risk to reward from my zones or more. Therefore, I will always just follow risk to reward. You can always also look for liquidity as target. So you see we have this low right here. You could use it as liquidity. You could use it as liquidity and just target the takeout of this low and then target the takeout of this liquidity low. Then target the takeout of this liquidity low, for example. Target the takeout of this liquidity low. Okay, and then just keep on targeting liquidity, the takeout of liquidity. Pretty much. But for me personally, I just like to use, for my targets, I just combine risk to reward and liquidity and market structure and how price has reacted to the zone and so on. Okay, that's what works the best for me. All these points are in your book for me to learn. All of these points are on the ebook, and on the ebook you will find all of the basic knowledge. Okay, so supply and demand, market structure, and so on. Then on the vault lessons, on the recorded lessons, is where I cover all the time on every single lesson, all of the confluences and the strategy. What do you mean by taking out liquidity? I simply mean by taking out liquidity, I simply mean taking out highs and lows. Just go over the lessons on liquidity. When I say liquidity grab or take out liquidity, essentially means price takes out the high or the low. Okay, remember there's liquidity on every high and low. Go over the liquidity lessons and you will understand. Very simple. Yes, all of this will be uploaded on the vault. And yes, Elite covers exactly each and every single one of these confluences. Let me just show. It covers each and every single one of these confluences. So let's say we go here, we go market structure. We have market structure. And this is everything on market structure. Okay, with real life example, with a video where we explain absolutely everything. Okay, then you get a quiz on it. Okay, I just answered random stuff, but this just goes on for every confluence of the strategy on the Elite section. The entry models are also explained in Elite. And you also have them on Instagram. You also have them on the vault, but on Elite, you, let's see. On Elite, you also have it explained, very well explained with what, a 23-minute video. Again, just covering them and looking at real life examples on the charts. And then obviously a quiz on it, okay? So yeah, very, very simple. So yeah, pretty much this is it, guys. If you have any other question which is not covered in the vault, go ahead and let me know. So for those of you asking about the lead, you can preview. Those of you asking about the lead, you can preview it here because I'm receiving messages on Telegram. Here you can preview it. I will now send you also the video and so on. Can you share yesterday's buy? So yesterday's buy, I'm not sure where was it. Was it this one right here? Well, before sharing yesterday's buy, to not make the lesson boring, sorry, I will end the Zoom call, the recording, and we will go ahead and look at yesterday's buy.